Welcome to this explainer on the hidden mechanics of pricing. We're uncovering the invisible strategies dictating your everyday costs.
Ever wonder why companies instantly hike prices when costs go up, but drag their feet dropping them?
Well, it starts with menu costs. Think physical stuff, like paying labor to update shelves and print new labels.
A Harvard and MIT study showed your average supermarket spends over $100,000 a year just changing prices.
Since updating prices costs so much, firms hesitate to lower them. Economists call this nominal rigidity.
But there's also a psychological layer at play here. The battle between our habit-driven autopilot and deep analytical thinking.
See, stable prices keep our brains comfortably on autopilot. Sudden price drops, they actually jolt us into comparing competitors.
That's exactly why Netflix keeps subscriptions stable, and why food brands quietly shrink package sizes instead of slashing prices.
Welcome to behavioral pricing. This is where companies use clever psychological tricks to influence perceived value without losing margins. Take the left digit effect. It totally tricks your brain into feeling like $3.99 is way cheaper than $4.
Then there's the compromise effect. If you're unsure, it gently nudges you toward that safe, middle-tier option.
And the value effect. It perfectly explains why you'll happily pay double for a beer at a luxury resort. The final layer is more opportunistic. It's called greedflation, where price hikes basically cover for corporate margin expansion.
Get this, between late 2019 and mid-2022, rising corporate profits explained well over 40% of price increases.
How do they do it? Well, suppliers might falsely blame tariffs to hike costs on totally unaffected items.
Or they use price contagion, like artificially raising the cost of dryers just because washing machines face new tariffs.
The ultimate red flag is margin expansion. That's when profits skyrocket, even while raw material and logistics costs normalize. This kind of opportunistic greedflation absolutely thrives in complex supply chains, where zero transparency masks the true production costs.
To fight back, buyers have to demand detailed cost breakdowns and leverage data analytics to track component trends.
Surprisingly, economists argue that occasional price jolts are actually helpful. They snap us right out of bad purchasing habits. So the next time you tap your card, ask yourself, are you shopping on autopilot or are you deep thinking?